Happy Monday. Happy Veterans Day. Thank you to all the veterans that have served and are still serving. We are here at North Houston NHREI. We just got started. It's still early. You can come down and we have Daniel. He's amazing. So let me walk through here. We're at the Marriott in Shenandoah.
Can everybody in here agree that if you could get a brand new Bentley right now for $5,000, titled free and clear, you'd pay $5,000 to get that Bentley? Can I see a raise of hands if you pay the $5,000? Anybody that didn't raise your hand, you either don't have one or you're just not paying attention to what I'm saying. It's $5,000. Even if you don't want it, you can flip it for $200. All right, can we get an agreement that we're all buying for $5,000? That's support. Y'all didn't need to know anything other than that price was so ridiculously low that we know that we would buy it. Now, what if I told you right now that I got a brand new Bentley I could sell you for $276,000? Who's going to buy it? Even if you had the money, who's going to buy it? There might be a point where you hit a price that is a resistance. So remember it in that fashion. Support is a price point where people are willing to dive in. Resistance is a price point where people start getting scared and pull away. All right, the reason I put these two green bars up here is from a technical analysis standpoint. This green bar right here is a point of support. Prices have never driven below that. So anytime the prices get near that, support starts coming back into the market, and what happens to prices? They start going back up. Do y'all see that? The top line is what we're going to call a resistance line. This right here, it starts getting close, buyers back out. It drops back down, doesn't quite go all down to the resistance, gets back up to resistance, turns back around. Comes back up, and then what happened in 99? That resistance line, something happened. It went straight through it. Like the historical resistance, the historical price where people said, I'm no longer willing to buy, was broken right through. 1999. I'm going to throw another one up there though. Since we did break the historical path of resistance, I'm going to give it a new one. This is 2008 right here. We hit that price point and the market turned completely the other direction. Do y'all see what happened there? That green bar, what are we going to call that? Resistance line. We've got a new line of resistance. This chart that I pulled up right here is at the middle of 2018. There's an updated chart that I saw the other day. Where do you think we are at right now at house prices? We're right up there at that resistance line. Now, this is a historical indication. This is not a guarantee. Just historically, when prices got to that point, they turned the other direction. Is that a guarantee? No, but that is an indicator. Let's talk about some other indicators. The 10-2 T-bond reversal. That right there is a historic indicator of the upcoming recession. That's another one. So we've got two indicators stacking on top of each other. We've also got days on market increasing at certain price points in certain areas. Higher end homes are stagnating. They're not moving as fast as they were. Typically, your more affluent people are a little more in tune to the market, and they are going to be a little more cautious about their acquisitions. So we started seeing in DFW, home prices over $1 million pulling back. And then over 500,000 started pulling back. Days on market, months of inventory, all increasing. These are all multiple different indicators that are saying that we are likely moving towards what people are agreeing on is an upcoming potential recession. Now, is that a bad thing? No, it's not. Can you make money in a market when it is moving up? Yes, that is the easiest market to make your money in. That's where a lot of people are right now. They've been in a market that's been moving up for almost 10 years. 2008, it dropped. 2010, it started getting some support and coming back up. So we're looking at right at 9 years, almost 10 years of a solid support market. Prices just going up through the roof. We're right up there now. We're almost to a line of resistance. Okay. Move forward. Those who cannot remember the past are condemned to repeat it. I've been investing since 2006. I have seen what happens in the boots on the ground. I saw what happened in 2008 and 9 when short sales became extremely prevalent, when lending dried up, when flippers that looked like absolute rock stars because they were just crushing it in an upward trending cycle absolutely went bankrupt because they were unaware of what was going on around them, and all they could do is think on that micro level of, I'm a real estate flipper. I want everybody in this room right now to agree that you're real estate investors. You're not a wholesaler. You're not a landlord. You are a real estate investor. With real estate investing, you've got about 12 different acquisition disposition strategies available to you at any given point in time. And if you're not aware of what they are and you get stuck in the wrong cycle with the wrong property at the wrong time, you're in trouble. So let's talk about it some more though. Let's talk about a little bit more data. If y'all are getting tired of data, I'm not a left-brain person ever. I just learned that whenever I present in front of left-brain people, my sentiment doesn't matter to them. They want to see charts and graphs. So I started putting charts and graphs in my presentation. 1990 to 2000, average income, average home prices, average rents, they all kind of sat in the same area. Can we agree? What happens 99? Home prices, that purple line drives right through, and now it's way outside of everything else. Did anything else follow it? No, it didn't. In the crash of 2008, as it drops, we see around 2010 and 11, start seeing that line of support again, prices start going back the other direction. I have a very long list of anecdotal, empirical data to support some things that I believe, but I do not have enough time to speak on today because it would be A, hypothetical, and B, likely, I don't want to say over people's heads, but I'm going to move past that. Let's look at something else that happened right here though. Can we all agree that housing prices yet again moved away from that traditional channel and shot out? That purple line pulls away from everything else. Can I get an agreement or am I lost? Agreement? Are y'all just agreeing because I told you to agree? Or do y'all understand? What other line pulled away? The red one. What does the red one represent? Single family rental prices. Is there a possibility that the rentals have also pulled away from affordability some?
Yes.
Yes. There's a lot of things I could discuss on this, and I could think of a lot of reasons why institutional Wall Street, Main Street are actually combating right now for some of the real estate investing control right now. I don't have time to talk about that, but I believe it's very real, and I also have a very good plan for stopping it. I have a feeling that there's a lot of things going on at a much higher scale than what we as laymen at our current availability of knowledge are not aware of. But I'm not going to discuss that right now. I don't want everybody in here to think I'm a doomsdayer. I am typically a very bearish investor. I'm always thinking the market's going down, but because of that, I have to constantly put myself in check by following extremely smart people. Remember earlier I was talking about Shiller? Oops. Right there. Case Shiller. Almost all of these charts you'll see come through. Robert Shiller was a Yale economist. Very well-educated man. Keynote speaker at some of the largest, most affluent events in the world. He has also agreed that we're likely hitting another recession next year. Why is this important to you? It's because that means the most opportunity is abound here coming up soon. And if you are prepared for it, you too can be a part of it. Let's keep going. So that way it's not just me up here talking about this. Do remember though, economists have accurately predicted 5 of the last 2 recessions. So just because an economist says this does not mean anything. All I want you to do is be aware that there's a probability of it coming, and that when you enter or exit any real estate transaction, you have multiple strategies in your mind, so that way if the market does turn against you, you're prepared. Never go in with that idea that the market's always going to go up. Never do that. And always be aware that if the market does turn, how are you going to handle the turn? So let's keep going. Like I said, I'm an ignorant person. Extremely. If you'd like to find somebody smart, check out that book. It doesn't talk about the future, it does talk about the past. Nouriel Roubini is an economist that I would suggest anybody in here follow. He has some extreme thoughts on what might happen in this upcoming recession. But I'd suggest you follow it. And if you're not much of a reader, while I would strongly suggest you do, he gets deep into mortgage-backed securities, credit default swaps, and other securities that are extremely incestuous and extremely, I hate to use the word powerful, but powerful. Very smart people created those things. Those things did not happen by accident. That last recession was a massive profit to someone that was far smarter than me. There was a lot of money made that time around, and we're not discussing it for some reason. Why did we not highlight how much money was made? Enough money that it almost brought down AIG, 100,000 employee insurance company. Lehman Brothers gone, Morgan Stanley gone, and tons and tons and tons of small banks all devoured up. But we don't hear about that in the news. We hear about smoke and mirrors bullshit. It's true. A lot of money was made on that. AIG would have went down if it wasn't for the fact that the Fed bailed them out. And with the money that bailed them out, what they used that money to do? I've got a lot of thoughts. You start digging deep in the weeds and it starts looking really dirty. The Big Short is another one. The Big Short is another one. It's a movie. There's a little bit of cussing, a lot of nudity, my apologies. But it's a fairly accurate representation in a educational entertainment style. I'd suggest watching that one as well. Moving forward. Warren Buffett has said this, and Warren Buffett is probably one of the most well-recognized real estate investors, investors in the world. Multi-billionaire, extremely intelligent man.